Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Monday, the 15th of March, 2021. A few things. Remember, if you're watching these and you like these videos, do me a favor. If you're on YouTube, it costs you nothing to either hit subscribe or put the like it. It helps us with the algorithms, get better placement there, and we want that viewership to go up. If you want these to continue, that's my condition. Now, for those of you that are paying subscribers to my morning subscriber video for SPDRs and ETFs, tomorrow's the first day we're putting this out with our new, well, it's not a new computer, it's our video rendering computer. Since we moved out of our office in March, I haven't used those for the morning subscriber video. They will take my rendering time down about 90%. So if it takes a half hour to render a video, it's going to take 3 minutes. That's going to change the speed that I should be able to get this published. So when I start recording now at 8:40 in the morning, and it takes about 25-30 minutes to finish the video because that's how long they are, the rendering will be that short. I should have these out before 9:30 in the morning. That's my goal. So if it works, I told you we were going to do that. I'm still getting a lot of emails. Where am I on that online Bollinger Band course? I am working. I worked on it Saturday and Sunday. I threw away some chapters I had done, redid them, and this is by far the best course that I've ever done so far. The best. It does require you to be a bit more sophisticated so that you understand what a Bollinger Band is, slow stochastic, which is all in my obviously my charting course, but wait till you see this. It's going to be quite good. And we're now formulating that all current subscribers to my morning subscriber videos will get a discount. Everybody else won't. And the discount will be of the type that it's basically what it costs you a month to subscribe. So I'm going to give you 1 month free of your subscription in theory for when you buy this. That's how I'm trying to do it. Okay. So where are we in everything? Well, this is a big week. This is a lot of economic talk week. 3 central banks coming out with their policies, including our Federal Reserve. We've got New Zealand and Australia coming out with important economic data. We have a whole round today of Chinese data that the market, as good as the data looked, the Chinese stock markets were lower off the data, not up. Remember, the Chinese data is going to look fabulous because unlike America or Europe, when you tell people stay in, you can get shot if you go out or arrested. It doesn't quite happen that way in Europe and the United States. You can tell people in the U.S. don't go out and they go out anyways. I think you're aware of that. But that meant that their economic data from the January-February timeframe in China was a lot, if you will, worse, and now their numbers are absolutely stellar. They know that, and that's why they're putting out their forecast for GDP not with absolutely crazy numbers, closer to 6% growth than what a lot of people thought could be a 9-10%. I had heard that whisper talk earlier, nowhere near that. But let's go to the chart action. Gamestop got hit today. The market down 16.77%. This is just a wild swinging market, as you know. You got overbought. I've mentioned that. You don't stay over the upper Bollinger Band more than 5% of the time while the trend is up. I think the pros got out of this market, and I think that's the pullback. Now, it did ride that upper Bollinger Band all the way up, and then you had this big move. So I think the question is, where did they come out? Well, this was the first time that they started hitting the upper Bollinger Bands. It could be anywhere in there. I do not think, as a chartist and understanding this, that they were in this whole ride. I think that's more the retail trader that's newer to the market. Just a guess. I don't know, but you know, I've been around this long enough. AMC, they're going to open up their LA theaters. That's bigger than New York City. So let's get this market up 25% today. I get it. People are going to go to the movie theater. They are tired of staying home on their big screens. There's nothing like the movie theater experience. Doesn't mean they're going to last in business. I know you don't want to hear that from me. They've got to figure out something because it's going to be a problem for them. I mean, that's just how movie theaters work. But we'll see if they can do it. Think of all the restructuring over the years that you had with them. But as I said, the trend is up, the bias is up, you're overbought as can be, you're over the upper Bollinger Band. Nah, I think the pros were coming out right here. I don't think they bought the market back over here. This is where I think on this chart that they started coming out. In PAVE, as I told you, I think that you're going to hear more and more from the Biden administration, and they're doing it right now. How are we going to get infrastructure done? One of the things came out today, if you make under $400,000 a year, your family or you, there'll be no tax increase for you. So what they're saying is over that number, there's tax increases. There'll be wealth taxes in some way. They're figuring out what they want to do. They're floating these things already. This thing is going to be a hard-fought battle, but PAVE is responding to that infrastructure, infrastructure, infrastructure. When we get over to it, you had an outside day up today. What happens if you take out the low of an outside day in the next two trading sessions, which could be Tuesday or Wednesday? I'm not saying it will happen. What I am saying is if that happens, I will call this a bull trap. And as such, once it's taken out, I look to see the moving averages below the market. 2351 is that number. Now it's going to climb tomorrow. That number's moving about 13, 14 cents a day, as you can see. I can live with that. So it'll probably around 2365 or so if it's taken out. What if it keeps going up? Well, let's see the Bollinger Band. That's the first thing. You're right on it. So this is a market that's got that gorilla glue trade. It latched on, it hasn't let go, and with it, you've developed the embedded reading. So a normal break in the market, I think, would get bought by the pros, but if it breaks through that low first, it can be a deeper break than you think. Problem, I don't want to see the market take out that low, and I've been the bull. In THCX, okay, we're getting high again. So here comes the market making a 22.59. So it's just come up roughly $6 if you take a look off that low. It's now got a pattern of a higher high, lower low. There was one chance if you were bearish to cover shorts, and what do I teach you each and every video? The first time you hit a Bollinger Band is where I think pros take money off the table. I'm always assuming if you're under the 18-day average, you're bearish. You have that bearish bias. I'm always assuming if you're over that number, you're bullish. You have the bullish bias. I won't change that because it's what I teach in the charting course. You're overbought. Be careful. I doubt it's going to get very far beyond that 23.24 if it can get there. In SMH, you now have negated the downtrend this market had with today's action. Prior to this, you had these lower highs and lower lows from there to there. The market held the 100-day average and the lower Bollinger Band. You know I was saying, and I'll typically always say, that's a pretty formidable support numbers. That combination. The 200-day is another big one. But that's important in the market. And with today's action, you took out the highs of 2 days ago. So I'm looking for a challenge of the 236.59 level. Doesn't mean the market's going to go higher than that, but a close over that will give the market then the upside bias as well. So then I'd have momentum up, the swing line up, bias up. I'd be bullish. No other question about it, for me at least. In XLI, the industrial sector, Spider, this is that gorilla glue trade that I like to call it. The market latched on to the upper Bollinger Band and just stayed there. Now, I know you're going to say, Ira, you said the first time you hit a Bollinger Band, pros take money off the table. I'll stick with what I said. I realize it. Okay, that doesn't mean that they're buying up there. Not at all. Do I think they took off their full positions? I don't know, but it wouldn't surprise me as a trader. Yes. Okay. Yes, as a trader, and it's going higher. I get it. I see what it's doing. You can look at the weekly chart. You'll see what's going on there too, which I showed over the weekend. And by the way, that's for my subscribers where I show all that. In the XLA, the energy sector, Spider, bullish still. You have the embedded reading. Get this red line to close under 80, then I think you got to be out in longs. Until then, I still think there's buying going on. I'm not blind. I see the market has just gone from roughly the $40 level up to 54.37. So at any point you can get a correction here. This is not the time when you keep buying more and more of the market. You're looking for eventually a spot where the longs get knocked out and the game goes into a reset. You don't play for that. You stay with the bull side until the bull side's over. In QQQ, you can get, for the first time since the correction began right here, a pattern where if you get over 319.86, you could end up with higher lows, higher highs over the 18-day average. The one negative that'll be there is if it happens, the odds are strong you're going to be over a 70 level in the stochastic, and I consider anything over 70 overbought. But I'm aware of that. What do I think has happened so far? I think the pros have gone short. I think they're short right here. They've sold into the upside momentum, but they still have, if you take away today's action, lower highs, lower lows. You can't take away today's action. You got to respect it. But any move back under the lows of Friday of 311.39 puts you right up for a test of 307.99. And I do think the pros are short with the stop, what I said, over 319.86. And if it can stay over that, I think they'll flip-flop and be bullish very quickly. Emerging markets. The problem that I'm having with emerging markets is you had a big correction and you're bouncing. Fundamentally, if the U.S. keeps seeing higher interest rates, they're going to have trouble with their currencies. And emerging markets don't need that. They have to have their currency and their values somewhat stable. So that's a problem for me, but that's a fundamental issue. The chart issue is not there. The chart issue is higher lows, higher highs. You had an outside day up on Friday. Today's day one. You don't want to take out Friday's lows. As long as you don't, you're bullish. You recognize how overbought you are and that there's big resistance, 77 over 01, and that overall this market's in a consolidation phase. I don't know anyone that doesn't want to be long emerging markets eventually. The question is one of timing. In gold, gold's acting better. It's that simple. In the futures, I see it, and all of a sudden, GLD. You've suddenly got a pattern here where you ended a downtrend, and with today's action, for the first time, you have higher lows, higher highs. So while that's bullish, you're still under the 18-day average, which keeps you away from that. In other words, the two fight each other and you've got nothing even though momentum is pointing higher. The resistance, 163.14. This is not the case in the gold miners. They are in the bull camp. They are overbought. I'm viewing between here, today's action, and that Bollinger Band. A lot of traders are probably going to want to take some money off the table tomorrow if they can get a rally out of it. The reason is the overbought condition, but the chart action completely turned. This is a bullish chart that is overbought. Now, I haven't said that in a long time. You'd have to take out 32.08, the last swing line low, to break that pattern. Upside target, wherever that Bollinger Band comes in on the first leg. TLT, what do I teach you on the first time you hit a Bollinger Band? And you did that on Friday. As far as I'm concerned, especially going into an FOMC meeting and other central bank meetings this week, I think the pros are coming out. They're going to say, I'll take a look at the market. And that's what I expect. You're not trending. You have a higher high, lower low. In the euro, still in a bear camp here. Lower highs, lower lows, a bearish crossover. Do you see where the 18-day average, I'll bring you there. See how right here the red line's over the green, then it keeps coming back? That's a bearish crossover. Even if you rally, you're going to have stiff resistance at those two numbers. If you break, look for the support at this gray line right here, the 200-day average, and we'll see what goes on. To negate the downtrend, you have to take out last Thursday's number of 112.43. So that's what I'm reading on those type of charts. If you like what I do here, you might enjoy these Guide to Technical Indicators, volumes 1 and 2. They're in full color. You print them out on your printer. You can read them right on your computer screen. It explains all this. Each one's about 20 pages long, put together by our good friends at Modern Trader and Futures Magazine. One of the great reads. I mean, it's something you should read all the time because they write in a way that I talk, all right? It's that simple. They really write for the mass, not for for the person that's that quant guy. This is not their thing. That would be Stocks and Futures, I believe, Stocks and Options magazine. How do you get this? It's simple. Go to our website under free offers. Just fill out the form. We'll get it right to you. It's a PDF. You can call my staff. They'll get you set up on everything else you might want as well. I'm Ira Epstein. I look forward. I can't wait for the morning to see how fast I can get out that SPDR ETF video. I'm sure there'll be human error because I haven't done this before. But I've got all my notes and I've been around the computers long enough. But if I can save 20 minutes or so on rendering time, 25, whoa, we'll see tomorrow what it does. I'm Ira Epstein. You have a great night. Take care.